Good morning. Welcome to the latest edition of Talking Bull. I'm Joe, joined by Steve and Jamie. Good morning, gents.
Good morning.
Morning, Joe.
It's the 28th of July. It's post Fed and some interesting price action, to say the least, overnight. So we'll get into that very shortly. But first of all, let's get through the latest headlines to set you up for the day ahead. So, first up, the Federal Reserve hiked rates by 75 basis points as expected, and the policy decision on that was unanimous. According to the Fed, recent indicators of spending and production have softened, but job gains have been robust and inflation remains elevated. The Fed stated that it is attentive to inflation risks and expects further rate hikes will be appropriate. It will, however, be prepared to adjust strategy if risks emerge that could jeopardize its goals. So, all in all, a bit of a mixed bag from Jerome Powell. He stated that the jobs growth number was slower but still robust. Although commodity prices have fallen, there is still additional upward pressures on inflation, and the Fed wants to see compelling evidence of inflation coming down over the next few months. He did, however, add that it's likely to be appropriate to slow the rate of increases at some point, and the Fed is aiming for the range of 3 to 3.5% by the end of the year. According to Powell, there is also some evidence of necessary slowdown in activity. The Fed expectations have been called back slightly. Powell's comments yesterday, there was a shift in the market pricing, with traders now seeing a 50 basis point rate hike as the most likely outcome for the September meeting. And there are also hopes that there will be a slightly earlier and lower peak in rates. The dollar dipped quite considerably on Powell's comments. There was inevitable choppy trading after the Fed decision, with Powell's comments in particular leading to some sharp currency moves, which we'll come on to shortly. There was also some relief in indices as well, and the dollar eventually posted significant losses on the session, and there is hopes that there will be a slightly less hawkish stance going forward. We saw the dollar index trade down to almost 3-week lows. Off the back of that, also, there was a strong rally in equities. US indices rallied strongly on the comments, with markets focusing on hopes for a slightly less hawkish stance rather than fears that the inflation data will force the Fed to be more aggressive. The Nasdaq posted a gain of just over 4%, which was its strongest advance in over 2 years. In terms of data today, we've got US GDP data that will be released later on this afternoon, with expectations of a small net growth of 0.4% after a 1.6% decline previously. Another negative reading would technically put the US in recession and reinforce expectations of a more measured Fed stance. So the data doesn't stop today. But obviously some pretty significant moves overnight, particularly in assets associated with risk. So, Steve, are you going to run us through some markets to start with?
Yeah, I'm going to take a look at Bitcoin. Obviously, as we normally do, we sort of have a brief look at Bitcoin to see where that's going. Normally, it's driven by the stock market, and that was no exception yesterday. We've seen now the market react from this corrective channel. I believe it's only a corrective channel, but overall, it's a positive reaction. It's a morning star formation. We're back well above the 21-day moving average, and I think there's good potential now for a bit of follow through on the indices side of things and the crypto on the Bitcoin side of things, which, as I say, is pretty driven by that. The major resistances we have above, a few numbers we can throw at you just to give you an idea. I might actually just make this a little bit bigger because I'm actually struggling to see these levels myself. 24,280, the first resistance, that was the swing high back in the 20th of July. 25,400, which was the spike lower that we saw on the 12th of May. And the major resistance area we get when we get up to the 28,500 to 29,000 level. So for me, there's good potential for us to get up there. From a Fibonacci perspective, let's take a look at whether there's any decent Fibonacci retracement levels. I mean, we definitely got something around about the let's try have a look, see if the 38.2 comes in and is significant. Yeah, pretty significant, just above the 29,000 level. So for me, that would be a sort of normal corrective reaction for Bitcoin. And above that, we've got the 50% fib, which is not so popular as the 61 or the 38, but nevertheless, it's quite significant. And that comes in at sort of decent levels. It comes in at the spike lows here at 30, just under 33,000. And also that was a resistance that we picked up from this corrective phase we went through between May and June. So that's a bit about enough for Bitcoin. Let's look at the real markets that we focus on. And gold has continued this reaction from the support level that we picked up many moons ago. We saw the spike lower down to around about the 1680 level, and obviously this is a key level in the longer term chart for gold. Will we get the same sort of reaction that we've had 4 times before, where we flirt with this 1675 to 1680 level and have a significant move higher? A little bit of time to play out, but it's making the right motions for me at the moment. We're back to the 21-day moving average. That's a significant moving average, key moving average that I like to look at. We're back above, we're testing the 1745 to 1750 area of resistance. Back in July, this was the highest price we've seen in over, it looks like about 3 weeks. We got up to 1752 and a half. So a break above that level, I'm sure there'll be a little bit of resistance there, a few sellers coming in there, but a break above that level and a significant close above that on a daily basis would lend me to think that this corrective phase has really worked, and further upside is on the cards. So let's take a look at the Fibonacci levels. A long way off, really. Just a normal correction would be around about a 38.2% fib. That's all the way up at 1830, so long way to go before we get to there, almost $90 away. Looking at the shorter term charts, we can see the makings of a potential inverse head and shoulders formation. So something just to bear in mind. It's still got a way to go. I saw Joe draw this yesterday. It was maybe slightly, this was the downward sloping one. Oh, what have I done there? That's all over the shop, that is. Let me redraw that for you. The one I liked was this, Joe. It sort of takes this left shoulder from here rather than maybe where you placed it on your thing, which was around about down here, which is probably well, I mean, we could say this is like a multiple head, I suppose, but you can take it from down here as well.
Yeah,
But nevertheless,
I drew both on, I think,
oh,
yesterday, but
did you?
that was my preferred one. I like the more a horizontal line to target. It looks like it's
Yeah,
busting through that today.
yeah, exactly. And I like it when it takes out this this high we saw on the 22nd of July. What was that? 1740. So for me, 1740 is probably the key level to watch. And if we do get a break above 1745, and we'll start holding above 1745, but obviously 1752 is maybe the real level to watch. Then we have the challenge of breaking above the downward trending resistance, which we can see here, multiple touch points here. So it's quite a strong one. Well, despite the fact it starts at 13th of June, it's not that far away. So I imagine that we'll see something there, and also taking into account this spike lower here, 1786. So there are a couple of points to watch on the gold market, but it's really sort of like, for me, looking like a nice positive up move, and sort of like went well with my trade gun to head trade idea yesterday, which we'll talk about in a minute. Looking at oil, similar sort of formation I'm seeing in oil. There is potential. We're down at the 21-day moving average, so it all feels a bit dollar linked, a bit US dollar linked. We're seeing the dollar pair back a little bit, potentially chances of the rate hikes slowing, so maybe it allows all the other currencies to catch up a little bit. But really, the sort of like the strength of the dollar, if that starts to weaken, then we should see some sort of bounce back in these commodity currencies, and both gold and oil showing the same sort of formations, same sort of moving averages, same sort of candles. It all seems to be falling into place. What could spoil it? No idea.
Thanks, Steve. Great roundup there. And yeah, nice to have something to talk about on gold and silver and these, well, not so much oil, but certainly the precious metals, because they've been stuck for some time, it feels. So onto FX, and yes, it is dollar linked. And as we saw yesterday, there was a pretty chunky correction in the US dollar that continues to take shape from the highs that we posted on the 14th of July. We've now broken this bullish channel. It's only a short-term bullish channel. This is a daily chart. We've gapped below that today on the open, but we are fast approaching the next level of support, which is from this swing high here. We obviously saw that broken and now about to get it retested. That's at 105.78. So I still don't think the bullishness on the US dollar is finished, but we may see some sort of correction in the short term. And in terms of the Fibonacci levels, if we scroll back to the start of the move, which is back here in May 21, the 38.2 comes in at 101.74. So that would be a natural correction level for this to potentially target over the short to medium term. And then maybe what we'll be doing is forming some sort of top. But again, that's going to take some weeks and months in order to play out. So dollar looks like it's under pressure at the minute, and we are going to see continued appetite for riskier assets. So looking at some of the other currencies, we saw Euro US dollar yesterday post a decent bit of strength. We are higher today by 0.17% as things stand, but it's got a fair amount of work to do still on the upside before we can get too excited about the fortunes of Euro USD. Firstly, we've got this big resistance area here at around 103.50. And that I think is going to be a pretty stiff challenge for it to overcome. And until it does, I think overall the bias will remain bearish and we can look for lower prices. As we stand at the minute, we've obviously got price in and around the sort of middle of this range here. So risk reward isn't particularly great on the short side or really on the long side for now. So not too many opportunities for me on that. Certainly looking at it on a daily basis. If we take a look at cable yesterday, that finally broke out of this wedge pattern that we've been speaking about for a while. That was off the back of a number of sessions of indecision, but finally got above this 120.56 level with a really impulsive move to the upside. We are slightly higher today, but that could trigger a fresh move to the upside on sterling versus the US dollar. And we saw some strength across the board really on a number of sterling pairs. Let's just have a quick flick through here. Not so much on Aussie, but potential for a breakout here of a long channel, a bit that goes back to where February earlier this year. So potentially a breakout there could lead to a decent move to the upside. If we look at sterling versus Swiss, we can see prices messing around here. Potential for a break higher. I think the one that stood out to me was, or maybe it was that one actually. I think what I had on another chart I was looking at was the a potential wedge pattern here that it was breaking out of following a large decline. So maybe we'll see some relief in sterling versus the Japanese yen. Just quickly on some other markets, looking at Australian dollar versus US dollar, that broke above this downtrend resistance line that's been in place since April earlier this year. So that could offer some encouragement to the bulls. It's been a pretty sharp move higher without really any testing pullback. So I'm not sure I'd want to chase that at this point. But if we do get some consolidation around sort of 69.50, then that may provide some opportunities for the bulls. Let's take a look at New Zealand dollar. Similar situation, breaking out through this downtrend resistance, and did that actually a few days back on the 21st of July. A little bit of a pullback, so a bit of confirmation there that the level is likely to hold, and we could see a continuation higher. Dollar CAD, that's threatening to break down through this support at 128.19. A lot of fresh space for this to move into on the downside and then continue to trade within this range. So that could be a reasonable opportunity for anybody looking at currencies today. If we look at dollar Swiss, that continues to be on the back foot, approaching support areas around 94.95. And if we take a look at dollar yen, quite interestingly there, we can see a nice break of the trend channel there, and also a removal of support there at 130. 556. So actually not a removal of it yet, hasn't broken below it. But if we do get close below that level, then for me that would signal that we're about to see a bit of an unwinding in dollar yen following the crazy amount of strength that we've seen in it over a number of months. Okay, so let's move on to indices then. And it was a pretty good session for the indices as well. This is the Aussie 200 or ASX 200. That's rallying into this band of resistance that we've got here on the charts around 69.10. Getting very close. It'll be interesting to see what sort of reaction we get there. We've got a couple of key lows from back in March 22 and May 22. So it would be interesting to see if we can get above that. If we take a look at the DAX, not as impressive, has to be said yesterday, although we did pretty much engulf the body of the previous day from the 26th of July. So maybe what we've seen here is a nice retest of this short-term double bottom, and we'll see higher prices persist in the short term. Nasdaq, as we said earlier, big move there, 4% higher on the day. We've seen the breakout of this triangle, a nice pullback to retest the new support at 12,225, and then prices have moved to the upside. The next test for that is at 12,941. If we can overcome that, then maybe what we've got here is some sort of rounded bottom formation, and we could see potentially higher prices persist for a little while yet. S&P 500, again, broken out of this triangle, also broken out of this downtrend, looks to be heading higher. We've got a cluster of resistance levels to target at 4106 to 4136. So it'll be interesting to see what sort of reaction we get in and around here on the S&P 500. And then finally, let's take a look at the FTSE 100. This really has been in a world of its own for the past few months because of the dollar influence in the market. But given that we saw a bit of dollar weakening yesterday, it's rallied into this 61.8% fib level at 7405. It's just a short-term range here that we're exploring, and so far has failed today. So maybe that will be held back, but ultimately it's trading in a range and isn't the easiest of markets to navigate at the moment. That's it on the stock and FX front. Jamie, going to run us through some stocks, and we'll have a look at what's happening there.
Yeah, thanks, Joe. Yeah, off the back of all the announcements yesterday, the stocks actually generally had a really positive day. But starting how we usually do on the biggest gainer and loser, we're back with PGY, our biggest gainer, or at least one of them. And I mentioned how yesterday this felt like a bit of a short squeeze, and it's still playing out that way with no real stopping. I mean, it's gone all the way from $2.42 on the 19th of July, and now it's trading at $21.97. So there's really no respite. It gapped up again yesterday. The volume is still crazy. It's got all the hallmark signs of a bit of a short squeeze here. So, like I said yesterday, there's no real news on this, but be careful shorting this because you never know. You've seen what happened with it was AMC and GameStop a while back, and you never know where these do end. So a little bit careful, but certainly one that's interesting to watch. See how high that can get. The flip side of that, we got TPB, which look at that, huge volume, huge gap down, and this was on the back of an earnings miss, I believe. Let's see if I can get it up. TradingView is doing that funny thing. Here we go. TPB, Turning Point Brands shed nearly 20% after reporting Q2 adjusted earnings of $0.7 per diluted share, down from $0.84 a year earlier. Four analysts polled by Capital IQ expected a $0.74 and net sales of 102.9 million, also missed expectations for 105.9 million. So yeah, an earnings miss and a pretty hard fall, down 20% on the close, but it actually got a fair bit lower than that at one stage. So yeah, not a happy time there. You can see though, we've been in a pretty lengthy downtrend since kind of the start of 2021 is where we peaked, and yeah, some high volume days on the down days. So that's all the kind of telltale signs for me of a stock that's kind of turning around from that kind of stage 2 uptrend, distributing stage 3, and now it looks like we've got a bit of a stage 4 downtrend. So yeah, one to keep an eye on there as well. Looking at the heat map for yesterday, as you can see, doesn't take an expert to think this was a really good day for the stock market. All this dark green color means that the stock in dark green was up 3% or more, I believe, and some were up nearly double that. Tesla 6%, Amazon 5%. Google, we know they had their earnings as well as Microsoft, and they were up both 7 and 6% respectively. So yeah, a really, really strong day, and let's see if we'll get any follow through for the rest of the week. But we'll jump into a couple of these individual shares and stocks, I should say. This is Apple looking at here. I think Apple's one of the ones we've got earnings for after close today. And this is looking really strong here at the moment. We had this slight pullback. That was actually at, I think, the 50% fib. There we go. It did get above it. A little bit of selling, came right back into this previous resistance here, which was support back in March, and it bought off that quite nicely. So a pretty nice day. If we look at the volume was up on the average we've seen over the last 20 days. So that's looking pretty positive. We'll see how the earnings look after close today, but looking pretty strong Apple at the moment from this this pullback we've had. Want to check out Coinbase. We had a pretty horrible day on 26th, so well, I don't even know what day of the week we're on. That would have been Tuesday, wouldn't it? And we had an inside buy yesterday. It's up 11%, and whenever we look at Coinbase, we're always getting these pretty big percentage moves, but an inside day there. Still, for me, we're looking for the breaks of this resistance at 63.55, which we did get, but didn't like it the first time. And the key support is 46. If we get below that, I think there's trouble looming. But a little bit of relief yesterday. Why have I looked at Disney? Not sure. Here we go. So we got back above. Excuse me, we got back above this. It's kind of $100 level. It's a bit of a psychological level. You can see here. This was support, then resistance, broke through, and it's worked quite nicely as support for the moment as well. Off the back of the meeting yesterday, you can see the volume was really low on this pullback here, these 3 bearish days, and that's led the buyers to step in, and a pretty positive looking candle here as well. So we'll see. Obviously, Disney's had a pretty rough time for quite a while. We've kind of been watching this come all the way down. But maybe a bit of a turnaround here. On the short term, we've got a bit of a triple bottom pattern here. So if we do get that playing out, let's see where we're targeting. So you can take that to there. Oops, there we go. So you're kind of looking back into these resistance levels around 108, $109. So that's where I'd be looking for Disney at the moment if we get able to follow through on the upside. Google, as we said, we had earnings on, when was that? 26th after close, so that would have been Tuesday as well. Came right back down to this support level, the recent lows we've had, lowest price we've seen since the middle of 2021. And the earnings sparked that move higher, and a really, really positive close on the day as well. The volume's starting to pick up too. So this channel, I mean, it's a textbook channel really. I mean, you've got a really clear resistance at about 119, and this really quite clear support level, which didn't get down to the last 2 times it was around here, but you know, this range is holding up very, very nicely at the moment. So I'd expect the next round of selling to continue again at 120, 119, and you know, maybe it won't hold, but I'd still expect there to be some resistance put up at that point. Meta, this is another one. I think we had earnings for this yesterday after close, it looks like, so we can perhaps have a look at that in a bit more detail in a second. But again, we were in this range, we broke out, we dipped right back in, came close to this support level. You can see there's a little bit of a higher lows being put in here, only a little bit, and it ran right into this previous resistance here, which isn't as clear cut, but it's a pretty clear level around here at 170, 172. And we'll see if we get some follow through from that today. But yes, some volume picking up as well, and it looks like an earnings miss, but it seems like a few of the key stocks were missing on their earnings but still rallying quite nicely, and that goes for Microsoft too, which again, similar to Google in a way, we don't have that quite as a clear cut of a channel here. But let me pull up some levels we've got. So the first one is this resistance here, this shorter term, and it looks like we're trying to get above that. I'm not completely convinced that this closed above it, so perhaps today if we get a more clear-cut close, that would be better. And then the level after that...
Is there an intraday price, Jamie, on the 4 hour?
Let's have a look.
Pre-market?
Yeah, so this, I mean, it kind of closed on the 4 hour at this level too. You can see where earnings came in on the 26th, but on yesterday at 9 o'clock, it didn't really do much in terms of movement. So we closed at, what was that, 268.21, or I think 268 on the dot actually. So we're right around that level. Um, and we'll see, you know, if we get a close below it, this resistance level could be holding up quite nicely. But if we get a close above today, you know, the next stop for me is 277. And this recent swing high, and that to me is starting to paint a bit of a picture for a turnaround here. You can see that this level down here about 250 is holding up quite nicely, so maybe we get a bit of a move higher on Microsoft, but let's let price action tell us that. We don't want to get ahead of ourselves. Quick look at Pinterest. We looked at this yesterday, how it was at support and gapped up really nicely and closed at the high of the day. Earnings for that coming in on the 1st of August, so that's right around the corner as well. But again, a pretty nice looking channel forming here. Still biased is selling into rallies though, with the price action we've seen previously. I think that was pretty much it. I don't know. It might be worth, as we have done recently, having a little bit of a look at which stocks are reporting earnings, so we can see the ones to keep an eye on. But looking at right here, just a quick look, we've got a bit of an inverse head and shoulders starting to form here. If I get our tool out, here we go. So you can kind of take the left shoulder, it's quite a small left shoulder, bit of a head, and a small right shoulder potentially beginning to form. I think we actually mentioned the potential for this happening the other day, and with the buying we saw yesterday, if we get a bit more of a follow through, then perhaps this is a bit of a sign, that lightning bolt action we like to see of a higher low being put in, and perhaps some further buying ahead if we get a break of that 780 level. But I don't know if you've got them ready, Joe. Should we have a quick look at some of the earnings for today?
Sure, no worries at all. Let me just sort this out.
Sorry, I put you a bit on the spot there.
That's okay. I was ready, but then I refreshed the screen and it's left me. Right, here we go. So, corporate calendar today. As Jamie mentioned, we had a few companies out reporting yesterday. This is just the Nasdaq 100 actually. Obviously, there's a lot more companies that report as well, but we would be here forever going through those. So, as we can see here, a number of companies reporting yesterday, generally missing. It would appear, but a bit of a mixed bag. Obviously, a couple of companies in there with some green on the tiles to indicate that they beat expectations. So today, on the Nasdaq anyway, we've got some heavyweights. We've got Amazon, we've got Apple, and we've got Intel all reporting numbers, and they're all AMC, so after market close. But what we can get here is a bit of an indication as to what to expect. The forecast is for a positive earnings per share on Amazon, following on from a really negative number that was posted in the previous quarter. So we'll be keeping an eye out for that. In terms of the history, generally the forecasts are pretty good, but obviously a big miss last time round. So it'll be interesting to see what happens on this occasion. Next up, we have Apple. So rich history of beating the analyst forecasts. So we'll wait and see what happens there. Typically, we get some positive price movement after the earnings when they come out. So that'd be interesting to see if that can follow suit. And then finally, Intel, which typically is a bit patchy, and usually, certainly over the last 10 quarters, when earnings have been reported, we've actually seen prices move quite considerably lower in the following day, week, and month. So it'd be interesting to see what happens this time round. All of those numbers are out after hours. Okay, so let's move on to the gun to the head challenge. So this is where each of us on the video make a call live on the video for what we think will play out between now and 9 o'clock tonight. So each of these ideas must have a stop and a target. They're all placed at market, and we publish all of these ideas to our TradingView channel. So if anybody wants to check them out, please feel free to do so. You'll find them all here. This is just a bit of fun, just to reiterate that. We are coming up with these ideas effectively with a gun to our head, so we've got to do it pretty quickly and without too much delving into the setups on these charts. But the ideas that we did yesterday, we'll start off with the worst one, which was mine, sadly. I went short of Aussie CAD. There was a nice break of channel on that. So I felt it was going to continue to move to the downside. Wasn't to be the case, and quite convincingly stopped out on that one. But thankfully, there was a stop loss there, so prevented losses from getting out of control. Jamie, you went short of China 50. Nice breakdown there from a triangle that you'd highlighted on the 4-hour chart. At 9 o'clock, you were actually offside by around about half an hour. So you weren't quite stopped out. So that certainly wasn't a disaster. And then over to the main man, Steve, with gold on his messy charts and these silly Chimoku clouds. And if I click the play button there, lovely win for Steve. Almost stopped out, but
Almost.
your convictions were correct, Steve, and
Miles away.
it
Miles
played out
away from getting stopped.
very nicely. So 1.83 R, I think you made on that yesterday, and
Yeah,
it's
I
still
was
going.
$2.50 away from getting stopped out. That's like a mountain, Joe. It was
I've
funny
seen,
actually.
I've seen some brokers with spreads that wide, so
That's true. When I sort of like saw that I saw a notification that the silver trade had triggered, which was I knew was above the market,
yeah,
and so I thought, I'm going to look at the chart now. I bet I've been stopped out, and yeah, just sort of managed to hold on there, which I did say.
nice.
I did feel we'll have a little bit of a volatility around about that 7 o'clock, but it was actually earlier than that the volatility occurred. I was on side when it actually
It was around 2 o'clock.
yeah, the Fed meeting announced it. So yeah, managed to hold on there. I quite like gold at the moment. It's this is the sort of like the move I've been looking for. It's now just plucking up the courage to set longs for the long haul, really. But still plenty of action to come before, it's not going to sort of like just roar away and we're going to miss out on it. It's there's going to be definitely some sort of like opportunities before then.
For sure. So have you got a trade ready, Steve? Do you want to take the honour?
I have got one that I've been looking at, and it was one I looked at the start of the week, and really it's around the oil idea that I posted at the start of the week, which I thought we've got an inverse head and shoulders, which I talked about earlier. Now, we've completed an ABC formation, very close to sort of like being perfect, but still just in front of being perfect at 87.55. And since then, we sort of indecision last week and a positive move this week, and this seems to be following through. And obviously, as I mentioned on the daily chart, this inverse head and shoulder looks to be playing out, but we haven't had a break of the neckline yet. So this is preempting, and this is getting in maybe too early. But we've broken above this resistance line once again. There is this. Actually, I'll remove this resistance line and put in this one here. Which we've let's turn it to red so it is resistance. So we've poked our head through it in the last hour, and our feeling I've got a feeling we've got a bit more follow through to come. So I'm going to really go for it here. Gonna buy WTI crude oil at 97.88. Let's have a little old stop. I'm going to leave it like that, Joe. Stop at 96.98. So I'm giving it a room. I'm giving it $1 stop. Looking to target $2.50 on the upside, which brings us into where this resistance is. Really, from this point back here. Let me get rid of that and do it properly. So there's the resistance at 165, just above the $100 mark. Whether we get that today or not, I don't know. And just for Joe, I'll remove my Ichimoku cloud.
Just for publishing, that would be good. Where's the target, Steve? What price is that?
Target is 148. So yeah, $2.50 target, $1 stop. That's my trade idea for today.
Lovely. Good luck, mate. Jamie, have you got one ready?
Yeah, I'm ready to go. Look at this. I'm on a weekly chart for Euro Swiss because I was looking at what I could really target on the downside, and we're so low that the next level's that 2015 when he took out was it the artificial floor they had at one. I can't really remember, but there was something bad that happened
You
with the
wasn't even
franc back
born
then.
then, was you, Jamie?
I was 3 years old, so I was not doing a lot.
Oh dear, I remember that well.
Yeah, I mean you can see it there. It's a
That
scary
cost me a
looking candle.
fortune that day.
Oh goodness, yeah.
All the markets shut down and everything. You couldn't
Cost a
actually
number of
trade.
brokers a fortune as well, didn't it?
Yeah, it cost everyone a fortune, apart from obviously the guys that did well out of it.
Yeah. But yeah, here we go. I mean, we're down at these low levels again. But let's get back to reality. Let's get back to where we are. Um, Obviously, in the short term, we have had this negative series of candles, lower highs, lower lows, going down to a 4-hour candle. What I'm seeing here is the sellers really trying to pin this back down. We've got this previous support here, which price has run into quite nicely, and we're seeing doji candles. We're seeing a lot of rejection from this level, so I'm pretty much just hoping for the rejection to hold up and the buyers to get bored and go look elsewhere, and this to start heading lower. So we're targeting, and this blue line is the low of that 2015 implosion, which is obviously very aggressive, but you don't shoot, you don't score kind of thing. It's a bit of a flag, you could argue, but to me, the buyers are running out of steam, and this is going to start heading lower. So we're going to attempt to sell this euro against the Swiss at current price, which is 0.9784. There we go. Going to target those lows which I mentioned previously at 0.9651, and the stop will be at just above the high of the candle. Hopefully this closes around here because that would be very bearish. So that's going to be at 0.9811. And if we do see this play out the whole way today, which I think is unlikely, it would net 4.93R, but hoping to be on side for this one by the end of the day at 9 o'clock.
Nice one.
Thank you.
Okay, so these are going to be posted to TradingView, guys. So if you want to check them out and follow them between now and 9 o'clock, please feel free to do so. So my trade of the day, I was just looking at the dollar index on the intraday chart. So this is the hourly chart. And we can see it's been a pretty nice reaction actually from these lows down here. So I'm wondering whether or not we're going to see prices continue to trade within this range. So from a risk reward perspective, some decent are on offer, potentially 2.5R up to the top end of that rally. But I wanted to find something a bit tastier that was linked to the US dollar. So I was looking at Ethereum actually, oddly enough. So looking at the daily chart, let me just bring this up. So on the long-term picture, I've got a head and shoulders top on Ethereum here. We've seen a big move to the downside. We've seen a decent correction higher, breaking out of this triangle pattern. The measured move of this bottom pattern came in at 1682.91. And also we've got a downtrend resistance line and some resistance here as well from previous swing lows back in May both in May earlier this year. So it's rallied into that level. So I'm wondering whether that's going to be quite a stiff resistance for this to overcome. And therefore, looking at it on the intraday charts, I think there's maybe an opportunity to sell this as it's into this swing high here from the 24th of July. So I can sell Ethereum now at 1628 with a stop loss above this high that was posted at 3 a.m. this morning, which is at 1683.9. And then target a move back down to these lows down here that we posted on the 26th of July at 1356.3, giving me a risk reward ratio of 4.87. So decent setup on the sort of longer term picture there to give me encouragement to take a look at this today. Obviously, all these ideas are highly speculative, but we've got appropriate risk management on all of them with stop losses and take profits. So we'll see how it goes. Hopefully, I'm on side by 9 o'clock.
Yeah, nice one. Good luck.
Okay, so let's then, so as I said, those ideas are going to be published on TradingView. That'll be on there shortly. But just to round up today's video, let's take a look at what's happening on the day ahead. And we have US GDP, which is due out at 1:30 today. That's the Q2 advanced reading. And at the same time, we have the latest read on the US jobless claim. So big number to watch today in the GDP, because if we come in with a negative reading, that would technically put the US in recession and reinforce expectations of more measures from the Federal Reserve. So that will be well watched today. So be careful if you've got anything linked to the US dollar or any exposure to US stocks and US indices. So that's pretty much it for the week in terms of high impact data. Next week, we've got a number of bits and pieces out, a lot of central bank action, and of course the biggie, the non-farm payroll number next Friday. So lots to keep us interested over the next week or so in markets.
I wonder if we're going to get any creative accounting around that GDP figure.
I wouldn't like to. You're
Comment.
you're chief conspiracist, so I'll let you.
Yeah, that's a good title. I like that.
Yeah.
Nice. I'll think about that.
Okay, we'll see if we can work with that. Okay, guys, thank you very much. Thanks to everybody that watched. We'll be back tomorrow morning, and until then, everybody, have a great day.
Cheers. Bye.
Bye bye.